All right, guys. I believe we are live now. Okay. So now let's look at the market review for the month and also for the week. So this is the last day of March and welcome to the month of April. I'm telling you ahead of time. So my name is George Magnus. This is TradeWithGeorgeFX team. So right now we're going to look at the market because it's another time that the market is going to get trendy. So I would like you to have a pen and a paper that you can use to jot down information. Please, this is very vital, and I believe you take it serious. Thank you very much. So right now we're going to look at some pairs. I was not able to write them down as I normally do, but I will expect you to jot down so that during the 5-day series we're going to have this week from Monday to Friday, we're going to have a series for between 1.5 hours. We're going to check the market, do analysis together, trade live, and I think it's going to be an awesome time. It's going to stabilize most of us. We're going to have questions and answers. So right now, I'm going to use the simplest approach, universal approach to the market, an approach that whatever system you are dependent upon, you can easily trade. So now, I believe every one of us is very aware of the candlestick analysis because I'm going to use simple principles to actually show us complex structures. So watch out for these pairs: AUDUSD, New Zealand USD, EURJPY, EURCAD. So AUDUSD, New Zealand USD, EURCAD, these pairs, they have doji right now. They have doji on the monthly. So and this is one of my major candle which I normally trade because I look at candles at the monthly and at the weekly majorly, sometimes at the daily, but at the monthly I always have a preference. Like here, this okay, let me just be who I am. Let me use trading view. Let me get trading view. I was trying to show you. Okay. It is trading view. So when you look at the chart, I'm going to use MT4 trading view, but I believe furthermore we'll be using just the trading view. So you can see this is the doji candle. This is the doji candle. So this is what we call the doji. So that's the doji candle. So now, whenever you see this candle, you expect momentum. You expect momentum. So, and you expect momentum to the downside, or you expect momentum to the upside, as the case may be. But we're going to analyze the market so that you know where, in particular, is this momentum going to occur. So that's very, very, very vital. So let me also show you the New Zealand USD. New Zealand USD. So see the New Zealand USD. I'm just trying to zoom so that you can be able to see. See, this is a doji again. This is a doji. Doji. This is the New Zealand. So you expect momentum, as the case may be. So while we analyze the market, you can know where you should look out for that. So I think you should have a writing material so that you can be able to take notes, because if you don't plan your trade, you're not going to make the kind of profits that you expect. So that's for New Zealand USD. So EURJPY. So for EURJPY, that is on the weekly. I think I have someone joining. Let me try to mute. Can you hear me over there? Okay, let me try to mute because we're having some sounds that are coming in. Okay, so I think I've gotten that. So the EURJPY, let me check my watch list over here. Okay, I have EURJPY. So okay, there's a forecast here already. EURJPY, the weekly chart. Oh, okay, not really much of a doji. Let me check my MT4 just to be sure where I saw the doji. Okay, because some of these charts from brokers don't actually give the same information. But the one I trade is more or less a doji here from FSTN. So that's why trading systems are being prioritized. You know, it's like I trade price action, advanced price action. But I noticed that Elliot Wave gives high probability setups. Elliot Wave not necessarily doesn't look at the candle, the shape, or whatsoever. If you squeeze the chart, if it's a bar chart, if it's a line chart, Elliot Wave still says the same thing. So, but whatever system you are using, there's nothing wrong with that. It's still perfect. So I'm coming. Let me ensure my audio is working. Okay, so right now let's that's for EURJPY. The doji is not actually confirmed here. It's not actually confirmed here. So, but the next one now is your EURCAD. So let's check EURCAD. EURCAD. Let's check for EURCAD. Just try to be patient. Okay. This is a monthly chart. So this is a doji on the monthly. So these are opportunities to watch out for. Either the momentum will continue to the downside or there'll be a reversal. So as we analyze the market, you will then know which direction to take. So let's go back to AUD New Zealand. AUD New Zealand. Okay, so right now on AUD New Zealand, okay, this is EURJPY where I was actually showing you the doji. I'm trying to be slow so that you ensure you get what I'm saying. Simple analysis. We are entering into a new month. We're entering into a new week. We're entering into a new phase of trading. So we had much of corrective structures. We had much of sideways movement from December, November ending till March till today. So, but right now we're going to see some move in the market. We're going to see some move in the market. So I'm preparing you now. Now, let me use Euro USD that you are familiar with. This is Euro USD. When you look at the charts, let me use my crosshair here. So this is February 29. Sorry, this is March 31st. We're entering into April. When you check April 2017, this is April. This is April. It is the weekly chart. April. Okay, see. This is March. You see that into April there was a jump in the market, and that was actually when the market got trendy after this range. So I'm just trying to show you after this range here, and you notice that this particular range, this is simple approach, very simple approach, but it gives you high income. So there's nothing, even a newbie can understand what I'm showing you. So when you look here, you see that this is 2011, that's from November ending, that's last year, to, okay, this is 16th of April, go back 9th of April, 2nd of April, okay, somewhere here. So, but actually in the month of April, that was when the breakout was noticed. Then into May and all that. Before coming back to this range, May, okay, that's April 2016, that's wonderful. Now when you look at here again, you see April 1st, you see the range. That was actually in April that the market broke out from that range again. So the market may be ranging the first 2 weeks, or it may break out forcefully. But at the same time, you have to be alert. So you don't have to miss the move. Okay, so let me show you the other range. This is the range. So we're gonna have 5-day section for this week. We're gonna trade the market live together, and we're gonna ask questions, review our skills. We're gonna work on a whole lot of things. So if you check the crosshair, look down at the time 25th March into April, this April 4th. From there, the market started breaking down. So take advantage of that. So that is why we are calling for this online meeting. So back to AUD New Zealand. Let me give you quick caps. Some of the setups do not have confirmations yet. So, but you're actually I'm gonna show you what you see and what you trade, and we're gonna trade together this week. So back to AUD USD. Okay. So on the monthly chart, I've been able to show you a candle that makes it so spectacular for us to trade, to watch out for big opportunities here. So, but then that's on the monthly. I'm coming from a very the highest time frame now on this chart. So because wherever you trade, the higher time frames have more impact to whatever that happens to the market. So that is why I personally prefer swing trading to scalping. That doesn't make scalping not good. It's absolutely okay. But I try to manage risk as much as I can. That's my utmost priority because I want to remain in the game. So this is a teaching section also. Do not mind the continuous talking. So this candle, you've seen it. I'm not going to mark it again. Now, when you look at the weekly chart now, just look at the two last candles. You can see that these are bearish reversal candles. So these candles are actually saying something. So they are bearish reversal candles. They don't actually mean you should just jump into the market and start selling. but it tells you that the momentum is still bearish. And maybe by the time we must have broken, we must have gone down to the lowest time frame. Probably we must have seen if we need to sell when market open or we need to buy. So I'm taking time to teach in this first chart. Other charts, I may not really break it down like this until we enter within the week. So if taking note of the monthly chart, the momentum is downwards. No, it's undecisive, which you know about the doji candle. And these ones are bearish. But now these lines you see me draw here, the horizontal lines are the key levels. So you have to be able to identify key levels in any chart you're working with. That is a priority when it comes to advanced swing trading. You must identify key levels, and I've showed you how to identify it through our course. I showed you how to identify key levels. If you don't know how to identify, please go back to the course. So now these are key levels. So in as much as the weekly chart has these bearish reversal patterns, they are all closing above a key level. So that alone is showing you that you are not supposed to quickly go into a sell just because you've seen this candle, because they are closing above, just like here where you see the candle here is actually closing above support. And when you go through the course, I was able to teach my price action mentor per se was able to teach how you can able to trade this candle. Because if you were to maybe if you were to buy from here or buy from here, you also be in profit. But then he taught how you can be able to get in here with the Fibonacci, and you see that you are all in this game if you can hold. Or let me not or let me not exaggerate per se. We are all in this game. This is the weekly, and when you look at the weekly, this is 200 pips is okay for the week. But I will quickly show you the Fibonacci, how you do it. What you do is just assuming this candle is this particular one. Just start from the beneath, since it's by from up to down. So see what I'm doing. So from here to here. So that's from 0. If it retraces back to 50%, so the 50% retracement is somewhere around here. You see? Oh, that's awesome. So you see that even using the Fibonacci on that candle, the Fibonacci was able to tell you that this line is a key level. You see? So go to the course, learn how to use the key level. I manually place this key level, and even using the Fibonacci to also confirm it as a key level, 50% retracement. So, and this trading this candle, as I showed you now, is also in the course. So the cost is more than the cost you actually paid for. It's just that sometimes people neglect simplicity. It's as simple as it can ever be. So now that 50% is here. So it simply shows that when you are trading it, I'm going to use the same thing here, but we're going to trade live from Monday so that you will see it happen when the market is live. Because most times I don't like the weekly review when the market is not active. You know, everybody is an expert when the chart is not moving. Over the weekend, someone can back test the chart, but no, I prefer live. That is where we can actually see the forecast and see it happen. So trying to clean up. So right now, the Fibonacci level is on the 50%. So here now you can see that even if you enter the market, probably you must have entered on that 50%, which is here. Probably when the market, this is a sell candle, so it opened here and closed there. So probably you put a buy limit as the market, you expect the market to hit and go up. So the market hit, opened your order, it dropped. That's the next week it dropped to this extent. So let's say it dropped how many pips? Let me confirm, because you know, sometimes this is it dropped. Okay, barely 26 pips. So if you entered immediately, probably it would have, if you just entered immediately, the market open 42 pips. So in any way, you are not actually making a mistake. But what is important is that you know what you are doing. So, but sometimes, you know, when you drop this 26 pips, a lot of people run away from the market. But then look at what you are targeting. This is 182, 185, 150 pips at minimum. So you must understand the trading system that you are using. So, but what I'm showing you here, is part of the course that I shared with you. So I'm not showing you something different from as though I'm doing another stuff. So right now we're still on AUD. So now this is a key level for us. This is a price to watch out for. Price to watch out for. So but when you look at this structure entirely, let me go to the monthly chart. Wow. When you look at this structure entirely, for those of us that trade Elliot Wave, when you look at the structure entirely, this is a corrective structure, which I'm not going to break down, but I just want to show you something. So, but to make it a little bit simple, this is an impulsive move, and this is corrective, and this is another impulsive move, and this is corrective, and this is impulsive. Okay. I'm checking out for these base. So this is impulsive, corrective, impulsive, corrective. Now, when you look at the distance from here, the distance from here to here is longer than the distance from here to here. So coming to the rules of Elliot Wave, that already tells you that that this should be your, from here to here, this should be your wave one. I think this thing is dark. Should be your wave one. From here to here is wave one. Correction 2. This is your wave 3. This is your wave 4. Now, wave 5 can go lower than wave 3, but there are variations. There are variations in corrective structures. So I just want to give us an eye opener on how I look at the market, because I have my confirmations, but none is an indicator. But I'll also show us confirmations with indicators here. So, but now there are variations in corrective structures, so which I'm not going to actually talk details on that. So, at sometimes wave 5 can stop here where wave 3 is, even before that. So, and all that and that and that and that. It depends on how we see the structure at lower time frame. But I'm just trying to show you something that even trading with the Elliot Wave, there is a possibility of the market reversing from current position or dropping some pips down before the reversal. So if I'm looking at this structure, because I'm not always quick with the market, so if I'm looking at this structure, I can decide to leave AUDUSD and come and trade it next week, next 2 weeks, next month, provided when I see my perfect setup. So what actually happens is this. What I do, since this is the big move that I'm looking at, I try to watch out for entry points that will actually give me what I want for the big move. I don't actually struggle for the little ones here, but this is the monthly chart, as to say. So this line here can also be up to 200, 300 pips. So, but I've been able to show you the simplest view from the wave analysis. So simplest for someone that may not know it at all. So now, but when we look at this place, because we're looking at here being the last impulsive move, which was where I drew 5, but that could not really be that last impulsive move, because here is actually sliding down. So these are more of corrections. The market is still sliding down. There is no sign for a bullish reversal. The market is still sliding downwards, sliding. So there is support here. There is a possibility of sliding, coming, maybe before it can go. So I'm showing you possibilities. There right now, what you're going to do is this. So how am I going to trade this pair? Because I've been able to see from the higher time frame, there are signals to sell, and there are also key levels to show me that I may not really be selling. But what you're going to look out in this pair is the breakout. The breakout here. So you're going to look at when this thing is going to break out from here. So these are one of the big moves you look out for. But the momentum is down, is bearish. So since the momentum is bearish, so I had to place this here. Okay. So I'm not going to talk more like an Elliot Wave trader. So because these are corrective structures, these are just ABC patterns. ABC. This is a 3-wave move. Okay. 1, 2, 3. So it's another correction. So we may be expecting a down move to the downside more. But whatever you are trading, also do not ignore your economic events. Now, because we have some data, a lot of data loaded up for China this week. So China economic events affects Australian dollar, and they are directly correlative or directly proportional. So if it's positive, this one is positive. So, and we have some of the data today that is Sunday. And right now, the data are coming out positive, which is showing us a momentum that is going to come up. So, but looking at the chart structures, we're not going to just rush into the market, but that is already giving us a signal for momentum. So now, what I'm going to do to trade this pair, so I'm going to watch out for here, this range. So I'm expecting the market to break down to my key level. So this my key level is one of the places I may be taking my buy orders. My buy orders. And this is another key level I should be taking my buy orders. But if this market opens and you see a gap to the downside, it clearly tells you that the momentum is bearish. So, but then once you see the market coming down to this level, once you see it coming down to this level, you don't just put your buy order. Even if it dips, you allow it until it comes and shows up. That's when you can only buy. Even when you buy, because this is the first week of the month and this is a new week, ensure you always have your tight stop loss. Because that doji candle I showed you on the monthly is already an indication of aggression. So, but when the market opens, that is when I can be able to show you clearly the direction to take. So, but I'm showing you how to take trades as a price action analyst. If any of these things are getting complicated to you, we will sort them out during the live sections in the week. So I've not actually told you what to trade, how to trade, but I'm looking at it for the month. And I'm telling you things that you should take note. Whatever you are doing, whatever system you are using, but take note of these exact things that I'm saying to you. Now, when I'm trading AUDUSD, I trade alongside with gold. I trade alongside with New Zealand USD. And I do not actually trade USD CNY, that's the Chinese currency. But if you trade yuan, USD yuan, that's okay. But I combine these things, gold, New Zealand USD, AUD USD. I combine them with yuan to be able to take that leap. Just like here, this for gold, we've been on this trade. So we had an issue last week. I was caught out by the ISP, the company that gives me network service. So because I have already arranged this trade for us, because the gold was kind of sliding to the upside. It was not it was not an impulsive move, just like this one. It's kind of sliding. It's kind of sliding. So that alone was able to signal to us that there's going to be a fall. Apart from that, the Monday, the very first Monday was bullish, which I traded that Monday. You can see the candle here. This is the Monday, this one Tuesday, Wednesday, Thursday, Friday. So I traded the Monday. This was the market open. I was expecting it took off. Now for the night, I had my break even because I was, once it took off, I placed my order. I had my break even. I was expecting order taking off. It broke down, hit my stop loss. So I allowed it. I was not in the trade. I missed the trade. It forcefully came down. Corrected, went back up again. So, but I entered around 13-12. Yeah. So that was it. Because though I shared the trade, because about gold, I think I shared it with those in the free group, because some of them were trading gold and asking me questions. So we traded it together. So this was where I entered. So, but when I saw this flag, because these are some ways to trade. So just like, since the market couldn't continue here, it broke down. For me, I don't actually speedily go and sell. I think I need to change the color. So even when I say a breakdown, I wait for a correction before I sell. So this was the correction. Though it's a big correction, I wait for it. Why? Because risk management is my priority. Because along this range, there's one thing that happens in the forex market. This is where a lot of traders lose their money, because this was the market open from Monday. It broke out, taking off Tuesday. A lot of people took their buy orders. A lot of buy orders came in here. I'm just trying to show you the psychology of the market. A lot of buy orders came in here. When it dropped, a lot of persons were holding. When it dropped from here to here, a lot of people left the market. Some were still holding the buy orders. Some left here with losses. Then when it corrected, because some people must have entered there, taking their sell order here, then it went bullish again to this extent. So this is up to 1, 13, 19, 13, 11. That's a whole lot of pips for gold. Because if you check your broker, gold is quite volatile. So some people that took the sell orders here, there is a high tendency that they left here again. Why those that had their buys, that kept holding their buy, were a little bit happy. The few that could hold on their buy, because many left here, took sell orders, it came here, they left again. So the few that could hold this sell were able to follow the drop if they could hold all this. So within this down up move, a lot of things has happened. So that's why even when it took down, you missed the trade. It started coming up. Maybe it came up to this extent. Maybe it came down, you were not in the trade. It started coming up. It took the first up, you were not in the trade. It's coming down again. As it's ranging, you try to place your order somewhere around the up, anything up. That's where you place your order. You don't actually place your order when it has come down. You place your sell order when it's up. Even at this spike, even when it spikes up here, you can actually draw this line to see if you are still in line. But you can also use your indicator or whatsoever it be to actually have your confirmations. But for me, this trade was actually very simple, because it's just playing around. It's just playing around below my key level. So look at it. So already, it's not compulsory that it's going to touch the key level. So, but at the same time, it shows that the momentum at this region is pushing it down. So when it started, I was now looking for entry points to go down. And even when the week opened, which I already saw this structure, I knew that at some point, it's going to go down within the week. Because during that Monday, I saw that AUD is going to start with momentum, which I said GDP AUD is going to sell. It was in the rough paper I had. So which it happened from here. But when I saw this thing, I knew that there's going to be a big drop because this is what we're looking at. This is the entire structure we're looking at. This one is an impulsive structure. This is a corrective structure. And this is an impulsive. Why do I say impulsive? Impulsive doesn't mean it must be buying. But impulsive can be buying and selling because Elliot Wave is relative. So I don't think I'll explain further than that. So let me clean up. We're having a data screen. So during the 5-day section, we're going to trade live all together. So, but gold has dropped. That was a good one. And the trade was a nice one. So remember I said gold, AUD, New Zealand, all together, all together, all together. I don't look at them separately. I look at them all together. But most of us that trade candles, this is an inside bar. It's called an inside bar. So this is a sign of bearish continuation with the inside bar. So, but this is first week. It's going to be very, very volatile. I don't expect anybody to quickly jump into the market. I wouldn't expect you to do that because a lot of people are going to lose their money. So, remember this week is non-farm payroll, US, there's a likelihood that US is going to have negative data. There's a likelihood. But if you look at these candles and then you are going down, that means this is good. You're actually saying US is going to get strong from the structure. The news are telling US is going to get weak. So we're going to trade perfect confirmations when the market opens. When the market opens, we watch out for perfect confirmations. But I'm giving you things that will make you ready. So now, when you look at this entire structure, the drop that yesterday was that day was massive. It was massive, and there's a likelihood that the structure which that was had in mind was actually is just a corrective structure. We have this 1, 2, 3, and this is 1, 2, 3. So for some of us that trade the Elliot Wave, so this year that we're not actually looking more for the downside. So we can actually continue another 1, 2, 3, and 1, 2, 3. It will keep correcting. But then what I'm showing you here at this point in time, okay, so this inside pin bar is giving a signal for a drop down here to actually make this 1, 2, 3. So, and I think this is more preferable. Here is where we look out for a stronger momentum to buy gold. Because when you look at gold from a higher time frame, you see that gold is actually getting exhaustive because over the years, gold has been a bubble. Not actually a bubble, has been safe haven. So when the stock market is crashing, a lot of money go into gold. So this is the monthly chart. So you can clearly see what is happening here. So here you can see this impulsive wave, just like you have in Bitcoin. So this whole impulsive wave, imagine from 97 to this, before the corrective structure started coming. So these are entire corrective structures. So these key levels I have, I just look at them. At every high, of these levels that I marked, I keep going down, down, down. Some points that come up, but they're all entire corrective structures. So for gold, so these whole corrective structures can correct, complete, but this is going to take a very long time. But imagine when you are aware of this information and you know where you're trading, it can still create a leg before going high. Just like this whole thing is happening in Bitcoin now. So, which it has happened in gold. So that's actually great advantage. So I'm giving you a broad information all together because we're going to trade together within the week. And we're going to just take trades with some of these reasons. Okay. I think I'm having issue with Go chat. So monthly chart. So okay, this is a level here. So for AUD gold, we're actually looking at this drop. So okay, it's already marked here. We're actually looking at this drop for the upside. So, but I'm not gonna decide now. I think I'm having issues with that chart for gold. I think it has crashed. Wow. So the simplest way to trade AUD USD as it is to take pivots. That's the simplest thing to do. You take pivots because the monthly chart is this. So what you do is to take pivots. You can wonder it is stressful, but that's the best thing to do. You take your monthly pivot, take your weekly pivot, take your daily pivot, and you are good to go. Once you take those 3 pivots and the market breaks the daily pivot to any direction, that's where you take your trade. And you take a profit at the next pivot level. Let me assume that some of us don't actually know what pivot levels are. So this is simplest approach. But by the end of that 5-day series, I think we're not going to have this baby communication because I'm trying to assume that some of us are not actually conversant. Some of us are not actually conversant. So now we're going to take the pivot. So for that monthly candle, the high of the candle is 0.71672. The low is 0.70023. The close is 0.70967. High, low, close. High, low, close. So 0.71672 plus. How do we calculate pivots? You get the high of the candle, the low of the candle, and the close of the candle. You add the high value, the low value, the close value, and you divide by 3. So what I just imputed is the high value, 0.70023. 0.23 plus 0.70967. I've added the 3, so I divide my answer by 3. So this becomes my monthly pivot. My monthly pivot is 0.708, let's say approximately 89. So let me take my my weekly pivot. So since just try to, if I move this candle now, try to look down, you'll notice something here. Try to look at this place I'm showing you now. This place, the road default. Or let me use something here. Try to look here. Once I start moving the crosshair, try to look here. You see some numbers. So now let me get the crosshair so that I can. This is the crosshair. So I'm going to the last candle. This is the weekly candle. So this is the weekly candle. So you see those figures that are there now. So open. Oh, look at it. Okay, that's the open date. Oh, we don't need OH. Oh, sorry, we need H. That's the high. Is 0.07081. Oh, sorry, high is 0.71466. The low is 0.70630. The close is 0.70967. So that's high, low, close. So I'm going to add them and I divide it by 3. So let's go over to our calculator. High is 0.71466. Zero point 70630 plus 7.0967. So weekly pivot is 0.71021. So let's take the daily pivot. So for the weekly pivot, for the daily pivot, so this is the daily candle. So the high is 0.71037. Low is 0.7032. Close is 0.709696. So we're gonna let's do that. 0.71033 plus 0.7, trying to get the figures. Last one is 0.709. Wow. 0. Let me start afresh. 71037 0.71037 plus 0.70732 plus 0.70967 equal to this divided by 3. So these are daily pivots. Why I'm doing this in this way, so that you can be able to do it yourself. Whenever it's the beginning of the month, beginning of the week, and adjust your pivot on daily basis. As simple as that. So now, coming back to your chart, what you simply do is just to decide for yourself which particular color do you intend to use for those pivot prices. So our monthly pivot is, let me assume our monthly pivot. I'm going to still delete these pivot lines, but I just want to try out something. I just want to fix them so I know how to fix them. Let me say, for instance, this color, look for things that are faint, pale green for the monthly. So and then let's call it monthly pivot AUDUSD. So for parameters, that's why I'll put in the number. I'm trying to take our time so that even some of us that are not so familiar with the MT4, the very few, please, because a lot of persons in our community are instructors. So, but for the very few, can be able to utilize this. How do you want it to show? Let it show in all the time frames. That's okay. So now, this is the monthly pivot. So you already said that these pivot lines will. Okay, let me put the weekly pivot. .7 1.021. For the weekly, let me get something light again. Sky blue. So we're gonna call it weekly pivot AUDUSD. Showing all the time frame. Try to make your confirmations. So this is the weekly pivot. So that's the weekly pivot. So let's take the daily pivot. So if pivot trading is something you're able to learn now, I think that is a good one. So we say daily pivot. Go pale green for the monthly, sky blue for the weekly, and look for something else that is light. Let me say pink for daily. Wow, that's cute. Very simple. On the monthly chart, on the monthly pivot, let me just stay on this daily chart. So the monthly is pale green, price closed above the monthly chart. So price is actually close to be above. And for what else? Sky blue, that's for the weekly. Price is below it. Okay. So the pivot also explains what I was showing you. I was looking at this range. So I'm trying to show you many trading systems and their correlations. I did not actually prepare this because when it comes to Forex, I don't prepare. Not that it's very good to prepare, but I did not actually prepare a script for all this. So I'm just trying to show you something, show you some stuff that even whenever you wake me up, it will still be the same. So already looking at the Elliot Wave we analyzed, we're looking at there's a hinge around here. So, and there's actually a hinge around here. You see that was how we drew that line. That's how we drew this line. So and at the same time, our sky blue weekly pivot is actually saying the same thing. So you now see that also using the pivot, you see that it's still very much undecisive. So no matter system you employ, so if you are using an indicator-based system, there's a level of indecisiveness here. So even if price breaks down, maybe retest and start going down, you can be able to take your sell order, but to watch out for these levels. That means if you sell, you break even. Price breaks down, pulls back, maybe retest here. As it goes, you break even. Sometimes it may not retest. As it goes down again, you break even. So, and those ones, these are actually your first trades for a new week, for a new month. I advise you to be conservative and follow a trading system, follow your trading plan. I have a trading plan, which we're all going to use. So that alone, if that happens, and because these are things that make you to be in a winning trade. Now, remember, we were looking at a corrective structure like this. Okay, even at the minimum, I'll not go back to the money. Let me stay here. I have something like this: 1, 2, 3. I have 3 here. They are sharing the same base. If there is a hindrance here, we can have 3 here. This is a zigzag. A is here, starts from here, giving you A here. B didn't come up to the level of A, is below, giving you C here. before we can watch out for reversals. So these reversals can maybe come in Thursday, Friday, non-farm payroll, and the rest of that. So you already have a picture of what it looks like. So, but now using that pivot way of trading, between the trade you break even, you will actually, so if there's a move down now, if the move was, if actually the market opened and it took down, is 149 pips, let's say an average of 100 pips you were in the trade. So when it's coming here, you are break even holding the first support level. You are the break even holding. If it comes to this second point, you are break even holding. It can decide to reverse here. If it breaks down, double might be opting for sell order, but you already know there could be a reaction at this zone. But you are break even, it didn't close the trade. If it breaks down, you are in the trade because here it's actually sliding down, just like I showed you before. You are in the trade. I remember I said earlier on that these points are points of bullish entries. But you have to see the market give you what you want before you can take the buy orders. I've already showed you how you, with this people, you take your sales. So if you see someone that is buying from here and the market is going so down, almost minus 100 pips, if the person knows the structure, the person can hold the trade. Depending if the person actually knows what he or she is doing. If you don't know what you are doing, you trade with the little time that you know, with the little time frame that you actually know. Just like I showed you here. This is for the monthly. I said this is 1, this is 3. We're looking at here to be 4. We're looking at here to be 4. That means 5 can get to this place. So, but there can be a likelihood that this is 1, 2, then 4 is like this. Four is like this. So this is a complex structure. This is a complex corrective structure. So you understand that here is 2, 3, so 1, 2, 3, 4. So this one AUDUSD, I'm showing you different approach. So this one is going 1, 2, 3. So this is a zigzag. 1, 2, 3. Or let me extend it. It can still be 1, 2. Wow. I'm just trying to show you a little of Elliot Wave. This is not, I'm not actually teaching you Elliot Wave because I'm teaching you Elliot Wave, I'll break it down. 1. So this particular one now, this particular second one. Oh, come on, my eraser. So, but this particular second one is not actually giving us, is giving here. Look at where it makes that little pullback. So why am I saying this? It gives a down move. So it's giving us that down move. So that was why I said that this could be the 5. Now, if this is the 5, that means that this is the 4. And that this corrective structure is here to here. No, is here, here. You see? So it's just like here, here. This one is quite complex. 1, 2, 3. Then here could be the 5. So, and we're expecting a sharp move. If that is 5. So we might be expecting a sharp ABC move. And this ABC move will form, or I need to change the color. So with that, this will give us a sharp A, B, C. We use the Fibonacci to calculate the levels. ABC move. Then this entire ABC move can give us a corrective structure, because ABC is correction to the downside, massive downside, that makes this whole entire move to be 1. This whole one is 2, and this whole one is 3. So I'm actually going to take our time to teach, or not really teach, or teach and elaborate. So, but I was working harder to get resources for us, because you can see that this is more predictive than any other way. There's clarity. So that was why I was looking at connecting us to expertise, not because they are better than us, but because we can actually have more feed, more materials, not materials to study, trade setups coming in. You know, we don't really restrict ourselves, have our time to study it and all that, to make it so much easy. But we're going to take things one at a time, because this is a live program, one at a time. So let me gradually take these things off. So, but then for we to be able to say, okay, we're going up from here, we have to, first of all, we have to be sure, figure out what is actually happening here. So which we're figuring out with our pivot, whatsoever. So you have your indicators that will help you sort you out how to enter. But I'm going to show us how to enter within the week. We're going to enter together, trade it together. But I've shown you a whole lot of stuff. So there'll be some sliding. Probably NFP can give us the start of this, not actually all, but the start. NFP can help to make this thing drop properly. And after NFP, we can have it. So that is Elliot Wave for you. If it doesn't happen like that, this whole thing can be a complete wave, which have to recount it. Then here will be a corrective structure. Then more downside. So either ways, there should be a level of understanding to your approach to the market. So for now, we are undecisive. AUDUSD monthly is a doji candle. So that's the simplest of all. Just do the pivot calculation I taught you. It will show you how to go about it. So, and I said something that I actually traded together with gold. Oh, my gold chart has crashed. It has crashed, and I don't really enjoy it when my charts crash, because that's taking me a long time to develop the chart. So, but notwithstanding, I'm going to rebuild it. So, okay, that is that. Let me see if I can look at New Zealand USD if there's anything much. So as you trade also at the same time, okay, we'll have the doji. So it's not even actually giving us a sign of from the entire chart. So the momentum is still down. So at market open, you see it dropping aggressively. So this is the minimum you can. These are the levels 1, 2. So it can drop. Next month opens and opens and opens. So if you're on the trade for a long time, 2 months time, and all that. So the momentum is bearish for the 3 of them. Though, as I told you, Chinese data are coming out positive, but that will not make us jump in. So if it comes out positive and gives a false reversal, even this pair will reverse, there will be some downward side before the reversal. So EURJPY, okay, I forecasted this trade. That was last week. We bought the pair, but somehow it's reversed. This Friday, Thursday, Wednesday, Monday, Tuesday, Friday, Thursday, Wednesday, Tuesday, Monday. Okay, we're able to buy. Wednesday, Thursday was down. So, but we're still on that bullish run because we're still on the bullish run. Because this alone now is trying to take us back. So though it was exhaustive here, so probably we can watch out for that continuation. Even if it comes down, these are possible entrance or they are possible entrance. So we are still bullish on that pair. Actually, we are just bullish against the JPY. So ensure you take notes. I normally say XXXJPY. So that could be Canadian dollar here. That could be euro, AUD. So watch out for any of this stuff. Whenever I see the economic data coming positive, you can pair them with JPY. Provided that JPY are coming out negative, so you can just pair them and be on that trade. These are nice trades. USD JPY. GDP is quite volatile, so I normally trade clear structures. I don't actually advise anybody to just trade GDP pairs. GDP pairs are very, very, very volatile. So they give massive profits, they accumulate massive losses. So take note of what I'm showing you. So, but let me look at this structure. So, but just to say, but there's a whole lineup for euro. So just note euro. Once the market opens, there's a whole lineup for euro. So if euro gets so dead, then just know that you are selling off the euro. So be conscious. Don't just throw away your calendar, please. I'm showing you how to make profit in the market. So Forex trade is not about he forecasted it and it happened that it's forecasted. I'm showing you how you can forecast the market, you're waiting for a buy, but when the market opened, you saw some other stocks, you took the opposite direction. So because sometimes a lot of people follow people that can trade very well on YouTube channels, they tell you on Sunday, buy once the market open, and maybe once the market open, maybe around the day themselves, they sold, but you blow the account with the buy. So that's why most times that we advise mentorship programs. So this whole thing can be a corrective structure. So this can still drop here, still drop down. So either ways, but we always respect our key levels. Go to the course. That's where you know how we got this key levels. See, there are just 3 on my chart. These 3 on my chart can pay off my bills. Just these 3 lines here. So I don't actually joke with them. I don't expect you to joke with them also. is very simple. So you can see these are structures I've been following for long. You can see that slide you saw on gold. Price was sliding up, sliding up. So around there, I was able to put my sell trade. See the corrective structure I told you before the crash, one of the major crashes. It crashed, dropped 1, 2. Okay, crash, corrected 1, 2. So maybe we can be looking out for that completion. Okay, the completion here. So we're still looking at euro. For euro comes out positive, it could be a fast move. So just watch your calendar. Don't be so quick to be in a trade. It's better you're not trading than you're running losing trades. Accumulation. Trade wisely. So I've been able to run quickly on those 4 pairs. So for gold has crashed, but keep an eye on the pair. Once you see gold going into 13000102, I think we're going back to our bullish region. But once gold is not able to conquer 1.1296.81, you're on the downside to 11268. So take note of these figures. If you need to pause and replay, you pause and replay and get those figures that I'm giving you. The gold chart has crashed, so I will not be able to communicate properly. So now for the Euro USD, for the Euro USD, let me zoom. Okay, when you look at this chart, you see that we actually had a pin bar, which I told you about how to trade it. This is a pin bar. We had it on January. So you saw as the market open, okay, these lines are some flags. I saw on lower time frame flags to sell. They said that from this point, the market sold down, though it closed backward. But the next month also showed that it still went back to that level. This is the doji. See, that doji is even worse than the key level. But the selling still went back to this level, this particular level. And that is what you are seeing here. So this doji can also continue giving you that momentum. If the momentum is effective, if it's not effective, the momentum is quite okay, then you can see your reversal from this point. But you know that since November ending, Euro USD has just been ranging. So like here, this is a key level, though it's on yellow. You can see, oh sorry, this as it closed below, showing that the resistance hold. You see what happened? This is a Marubozu. It was a trending month. So at every high in this month, there was a sign to sell. When it came here, this is a support. It took some buys, but it all closed on buy, no matter the move. So this doji exhaustion, this doji is an exhaustion because the exhaustion of candles brings light to men. So these are one of the parables of the man that invented Japanese candles. He said the exhaustion of candles bring light to men, bring money to your bank account. So all these are bullish momentum. So the doji at one point tells you the force is exhausting. So here showed an exhaustion. It went bullish, but all then was just doji again to the downside. So there could be some, if it goes bullish, it's going to be some range around here. So, but watch out for news. Even from now till before 12 p.m. on Monday GMT London time, the euro data will be out. We're having a whole lot of unemployment rates from Germany and a whole lot of them. So as they get so red, so dead, we're going down deep. We're deep in the EURCAD. You don't miss it out if we're going deep. We're all going deep. So, but they miraculously come out all positive. Mayoma, we are buying up. And if I'm buying up, I'm also looking at Euro USD. But why am I just looking at all these things? Let me show you something. Because I don't just trade a particular chart. There's a level of combination in what I do. So this is the dollar index. I don't joke with it. So when you look at the dollar index, you notice that this is a support that these key levels have traded them over a very long time, and it's been working out. There's the time I made this forecast, and it has come up to this place. So this is another sensitive place. You see that we've entered a sensitive phase in the market. So now, at this particular point, if this resistance 96.854, those support that have the dollar index chart, you can decide to take note of that. So if the price is unable to break this point, that means we are going down back. We're going down. This little move you are seeing here can give you a whole lot, because a little shift in the dollar index will give you a big move across the board, across the US pairs. So watch out, watch the dollar index. If the price is unable to conquer 96.855, sell off US, sell off USD currency, sell off US dollar, sell off. Minimum risk, because we change positions at any particular time. So minimum risk. You always chat me up to do your confirmations. We'll make our group arrive. So, but if the market opens and I see the gap, because I'm expecting gaps in the market because of this level of undecisiveness, I'm expecting gaps as the market will open. So if we see those gaps that we are expecting, then we will take the positions that we see in the gap. So you can see something like here, just like that level that is there. As the market opened, you saw the force. It has already shown the bearish. So it sold back before it could recuperate itself. It was going down. This was a forceful reversal. So even if it took you out, you hit your stop loss, it corrected, then that was why I entered for the long run. So here is another. If it opens here with the gap, my oh my, we are selling off the USD Friday. So you don't need to. That alone has told us what non-farm payroll will look like technically. So highest, if it gives you a gap, it can go back to close the gap. Once you go back to close the gap, that's the flag you need. Sorry for using the same color, but that's the flag you need to go down. So dollar index, I believe you know how it relates to all charts. So please take note. Dollar index, when it's bullish, US is bullish. When it's bearish, USD is bearish across the board. Please take note. Now another pair that we're going to watch out for is the USDCAD. Because actually something happened that was on Friday. We've been expecting momentum on CAD. I kept expecting, and I told most of us we were expecting momentum on CAD. So, and it actually came, but we have to be careful for the continuation. Though CAD unemployment rate is coming up on Friday, and that could be some big move for CAD. CAD is already giving a bearish momentum down. This is GBPCAD. So this is a range we've been trading for a long time. So there is this GBPCAD. But if you check most CAD pairs, okay, this one we've been on the move. EURCAD. So the weekly chart is trying to break out of this whole long term. So if it breaks this trend, oh boy, we're going deep down. So there's a doji there, EURCAD. There's a doji on the monthly. I've told you how you approach the doji, so do justice to that. This is a doji, so do justice to that when you find it. Don't miss out, please. You should be the one reminding me of this trades. You should be the one reminding me, telling me how did I go about the trade. I will give you updates in our group, or if you comment below for those that will see it on YouTube. No, it's not public. Sorry, it's for premium. So now that was dollar index and euro USD are the same. So dollar index, so just be careful because you can see the dollar index weekly, euro weekly. It tells you that euro USD, if both are weak, it's not a good time to trade it. So you watch out for pairs that are going to give you. But in the WhatsApp group, I'll give you all those information because we're expecting big moves. So USDCAD. Okay. We've been trading this for a long time, and these are one of my best pairs I trade. So, but I'm not gonna rally it down because we've taken a whole lot of time in AUD. So, but we have been doing a whole lot in this. So somehow we were expecting that this will copy itself back to this place. But there were a drop here, which were in the trade. So we had this, and there's a quick drop, but it's on a support level. So we're also watching out for gaps in the market if we're going to go massive down, because this Friday move, I'm not going to express it much. That will be in the group that I'll call out for the signals. We'll declare chart structure, but just the move on Friday alone gives us a continuation sign because we trade USDCAD alongside with crude oil. So know these things that I'm telling you. One of our traders was able to include soybean, but I'm still working on that. Still following it technically. So, but for the crude oil, we're massively bullish on the pair. I call that right from 43.50 zone. 43 around here. That was when I called the signal minimum some time ago. So we've been up and up and up, and crude oil has been pushing massively to regain strength after some crash to 36 or 40 something barrels per dollar. So, but all this whole stuff are just like this. But we're watching the momentum is still building up. So, but once we are bearish on crude oil, we are bearish on CAD. So we don't even wait for some data to show us. So, but that to say, we were no, I don't like this. So this is a level. So in case you use a straight line, drop it. In case you drop it, see, it's a key level. I don't know. You see something straight to draw it. Either to pick here, somewhere around there. So get the key level. It's a swing high, swing low. So I mentioned in the group when this close happened, sign for a bullish move, and it was massive on Friday. So though somewhere here it looks like a little resistance, just like we have in USDCAD. So once if we see price conquering that level, still going for the up move. If price doesn't conquer that level, that's a signal that GDP data, that CAD data will be coming out negative. So, but just be careful because even if price drops to this extent and it comes out aggressive, but I'm bullish. Let me not give you double bias. I'm bullish on crude oil. So at the same time, I'm expecting stronger momentum across the board for CAD. So, but along the week, as we have our live sections, we can deal with that. So across the board, the Canadian dollar, I'm expecting strong momentum. That USDCAD, EURCAD, GBPCAD, any other card that you trade, you can check it out for yourself. So then the AUD, we've looked at the AUD. So if we are bullish on the AUD, for now, I'm still bearish on those gold AUD news event for now. Though the Chinese that are coming out positive, still bearish for now. So two things that tells you where the market, where the book news are coming from, are the structures, the chart patterns. That's what I'm telling you now. Another thing is the economic events. So most times when you check your calendar, try to check your calendar at the before the market open. Try to run through the weekly calendar. I'm giving you broad information so that once as we work as a team, we can have persons that do all this whole stuff. So most of us should be aware of the calendar. Forex and forexfactory.com, and I actually recommend you use FX Book app. It's very informative. So just like I was telling you, this CNY, the data are they're all coming out positive. So AUD data are just coming up. So there are a whole lot of that are coming up. So this can also bring about the gap, the volatility that we're looking out for. So a whole lot of data are lined up for Monday. So these ones are for JPY. Here you can check out for the detail. Actual greater than forecast is good for the currency. This is the actual is when it comes out. When this actual is greater than what they forecasted, is okay. So, but the previous is this, and they're forecasting that it's going to come more lower. So they're already forecasting that JPY is going to be weak from what is being released. And on Tuesday, I think the same JPY has some, okay, this monetary base. I want to see average household spendings. So it's almost suggesting weakness, which from the structure I showed you, sell-offs for JPY, opportunities for that. Then the AUD are having their information packed. So, okay, this is 2 a.m. This is Nigerian time, please. Okay, just midnight for Nigeria. And that could be around 8 p.m. United States and 1 a.m. I'm talking about this particular 2 a.m. 1 a.m. for London. So you should be able to convert to your own time. 8. Wow. I think my time is not correct. Okay. This is 1 hour ahead of Nigeria. Okay, this is GMT plus 2. Okay, this is South African time now. Here, I will still correct it. But either way, ensure whenever you're using this app, try to correct this. Go to settings, try to ensure that the time is well set for you to be able to get the proper information. So AUD new home sales, you see, these are strong data. AUD Titanic, there's no time for it. That's what it means. New home sales most of the market. So it's coming up on Monday. So these are data that will actually give you the direction of the market. So actual greater than forecast is good. So -67, minus this, which was last time it came out, it was positive. Before that time, it was negative. So that's why you see EURUSD has been, AUD has just been sliding, just like I told you. There's a sliding. So there should be a correlation in what you do. So these are some of the factors that will guide your trading, that will guide the decisions that you make. You don't just make a decision just because RSI said so. That's okay if you just based on the indicator. But I'm giving you a whole lot of information at a go. So check out this information properly. This is Jeff, retail sales. Jeff, data does not always come. So whenever they come, try to take advantage of it. So there is strength, though I've told us massive strength on Jeff for past 2-3 weeks, and we've seen that. So still expecting the positive outcome. Okay, that's a Swiss franc. So there's a kind of stability with them. So Euro have a level of lineup. This is the PMI coming up, CPI coming up, unemployment rate coming up. So US still has 0.9, 0.4. Actual greater than forecast is good. So the forecast they are forecasting is quite lower. So watch out. Once you start seeing the reds, then there's this South African time, please. So just be aware that they are selling off. Economic DXY structure I showed you, it can conquer 96.855 again. They are selling off. So very simple. Okay, yeah, Canadian dollar still on Monday. Bank of Canada government speak. So this alone. So if it's dovish, then we are selling off. So, but if it's massive, so that alone, this speech, I think it should show up on Monday before the time. So if there is a gap for CAD, if we see a gap in the market, that will also help us. So on Tuesday, the whole lot of AUDC, Reserve Bank of Australia, a lot of things are coming up for this week. So you take advantage of them. Retail sales, these ones I'm calling out for you. They move the market, PMI. So Wednesday, these are preparations for non-farm payroll, non-farm employment change. These ones already give you signals. Either they are going to be okay. So predicting positive, the ECB, that's for Europe. So China is having holiday on Friday, bank holiday. So this is the big move for Canadian dollar. So USDCAD is going to be a battle during the non-farm payroll. So you not necessarily need to trade USDCAD if you don't have good capital, or if you don't actually get the direction before time. So these are what we are expecting generally. So you watch out for them. There's not much for Brexit. I think there's Brexit on Monday, though it's not written here. So that's why I said if you use the Facebook app, you'll see some of those Brexit and their time. Then you also check out on your DSTV or that cable station, whichever one you use, to know what is happening online concerning Brexit. So I know this is going to be cumbersome for a trader, but I'm using this time to show you some necessary tools that you need to advance your trading. So watch out for the GDP. GDPs are also a good opportunity. So if there's not going to be, if there's not going to be much, they're not going to be much for the Brexit, because when you look at the GDP here, there's a breakout from here, and there's a retest. So there could be some swinging down, because GDP might just be sluggish. There could just be some swinging down. So maybe after the swinging down, Friday can just give us this because of NFP, maybe poor US data. So giving us that. So we're still watching closely. But if GDP continues to crawl down, then so for GDP pairs, we're still bearish on GDP pairs, very much bearish. Then there's another pair, Euro New Zealand. New Zealand has some data coming up. So this one is looking bearish already. So that could be showing us an indication of weak New Zealand. Okay, here I was able to put an indicator. Okay, for those that use indicators. So, but I was able to open up this New Zealand chart. So I'll get up this. I'm gonna illustrate more on this on Monday. So, so I have 1, 2, 3, 4, 5, 10. Okay. Oh. 1, 2, 3. So, okay. I think we should be rounding off. Okay, I'm gonna round off with this. I'm gonna round off with this pair. So, but already, we're already having this correction. on don't want to really go deep into this spec. But the only simple there, this is a key level. Price already is closing above it, so price is trading on a strong support. So we're actually looking at the continuation, but this is a critical level. So I'll talk about critical level later. So just is a critical point, very, very critical. So as price open, you can decide to buy, you break even. Like FSTM can help me to put my stop loss where I entered. So I can watch out for this break. But this break can only happen if euro data are positive. So, and before you wake up, just as they not really wake up because we are from different parts of the world. But before the London Open, after the European section the London session is on, 2 hours after the open of the London session, we are already decided for the euro. So if we're having weak euro, once price breaks here, we test, just sell, just be on the sell to the downside, and that could be a massive move. So but the euro dollars are coming positive while on the up move. That's the simplest way I can approach this for you. So I think I was just looking at while I was in the RSI here, I was just seeing a possibility of entering a buy, but I think okay, I was looking out for possibility for divergence. Okay, now I remember why I had this. So looking at it, there will be a turn. So, but we're going to call it up here, and we're going to have the rest of the data in the group. So thank you very much.